Hey everyone, welcome back to Corporate Decoder, the place where we decode the hidden stories within company filings. And today we've got a filing that's all about impact. But let's see if that impact is hitting the mark or just missing the point. So this is a current report filing from TriLinc's Global Impact Fund LLC, a company that says it's all about making a difference through its investments. We're going to dive into what they've been up to lately, focusing on the numbers behind their impact claims. Alright, so the report itself is dated August 20th, 25, but it's giving us a snapshot of their situation as of July 31st, 2025. Think of it as checking the company's pulse right before we get the full update. This is where we start to see the meat of their operations. As of July 31st, TriLinc's Global Impact Fund, or TGIF as they call themselves, had about $23 million in portfolio assets. Now, importantly, these aren't just random investments. They're specifically talking about investments made to help businesses grow and to achieve what they call socioeconomic developments. So they're saying they're putting money to work not just for profit, but also for positive change. They also mentioned that their average loan size is around $10 million. This tells us they're working with fairly substantial businesses rather than small startups. This can mean bigger potential impact, but also potentially bigger risks if those businesses falter. Now, this next number is pretty significant. They funded a total of about $1.21 billion across 103 different companies around the world. That's a huge amount of money being deployed. They're supporting over 4,200 employees with these investments, which really drives home the impact part of their name. But what really matters is how much money they've gotten back, almost $900 million, which is 74% of what they've invested. This is a crucial metric. It shows their investments are not only being made, but are also being repaid. A 74% repayment rate on this scale is actually quite healthy and suggests they're doing a good job of managing their risk and ensuring their borrowers can pay them back. This means they have capital to reinvest and continue their impact mission. And finally, the report is signed off by Gloria S. the Chief Executive Officer, on August 20, 2025. This tells us she's on top of these filings and approving the information presented. So what's my take on all of this? TriLinc's Global Impact Fund seems to be doing what it says it's doing. They're deploying significant capital into businesses that are meant to create jobs and foster development. And importantly, they are getting a substantial portion of that money back. The repayment rate implies a solid understanding of their investment strategy and a capacity to manage a complex global portfolio. The risk here, as always with impact investing, is balancing the social good with financial returns. While their repayment rate looks good, there's always the possibility of unforeseen economic downturns affecting their borrowers. However, the size of their portfolio and the diversity of the 103 companies they invest in should provide some cushion against individual failures. For me, the key takeaway is that this isn't just feel-good investing. TGIF appears to have a robust operational framework that allows them to channel funds effectively and recoup those investments while theoretically driving positive change. It's a complex business to manage, but based on this snapshot, they seem to be on the right track. Now, looking at these numbers more broadly, TGIF appears to be effectively executing its stated mission. The weighted average loan size and the total number of borrower companies suggest a well-diversified investment strategy, which is a strength. The repayment rate is a strong positive indicator of their ability to select creditworthy borrowers and manage their loan portfolio. A notable opportunity for them is to continue expanding their impact by deploying the capital they've already recouped. Given the current global need for investment in development, TGIF is well positioned to continue growing its portfolio and its positive impact. A potential risk could be increased competition in the impact investing space, but if they maintain their current performance, they should remain a strong player. In conclusion, TGIF seems to be a company that is successfully combining financial investing with a mission to create positive social and economic impact. The reported figures suggest a well-managed company with a clear strategy. Alright, that's a breakdown of TriLinc's Global Impact Fund's latest filing. What's your take on impact investing and these numbers? Do you think it's harder to achieve financial success when focusing on social good? Drop your thoughts in the comments below. If this analysis was valuable, hitting that like button really helps us out. And subscribe for more deep dives into corporate filings. And hey, don't forget to join our Discord community linked in the description for even more discussions. Thanks for watching, and we'll see you in the next one.